I put General Motors on as a trade on Monday, right here at about $49.50. And today I had suggested selling some because why? Because it broke out. It broke past this level right here. Now I have a strategy that allowed us to get out within a few pennies of that high that I shared with X subscribers today. That's $10 a month at Alphatrends subscribers, of course. But you also have to look at the personality of General Motors. And look at prior examples. General Motors is a so-called blue chip safe stock, but is it really? I mean, look at the last rally and how it had broken out right here. So as it broke out at that point, people got excited. Well, guess what happened the very next day? It got the shit kicked out of it. And guess what happened when we had this move? We had another big rally right here. And then as it broke, these levels over here, it went for another day or two, but then it had a big gap lower, erased all those gains, and continued lower. So you have to look at this and say, do you want to be a breakout buyer, or do you want to buy when it makes sense on a shorter term time frame? Catch the momentum, ride it up 6-7%, and then sell some to the breakout chasers. Look at the personality of the stock. I don't think it's going to happen, but it wouldn't surprise me if the stock gapped down to $50 per share on Monday. I always sell into some strength, especially when I look at the personality of the stock and say, what's the personality of the stock? Risk is not a constant. Just because it's General Motors doesn't mean, hey, you can expect to have your stop underneath the higher lows. That is a prudent strategy, but you've got to take some off into strength, because people who didn't do it over here and people who didn't do it over here, they regretted it big time. So be smart, be safe, listen to the message of the market, listen to the stock that you're trading.